Want to buy residential investment real estate, but you really don't know how? Try the DSCR loan. Hey, what's up, everybody? It is Jeff Trevarthen, Jeff the Mortgage Pro. Thanks so much for joining me. Today, we're going to be looking at, on the show, we're going to be looking at DSCR loans for investors. And here's a thing that you want to look at. Are you someone who wants to buy residential real estate, like up to 1 to 4 units, and then sometimes 5 to 8 units, but you don't know where to start on how to do this? Maybe you have poor credit, maybe you don't know where to go, maybe you have properties but no job and you can't qualify, then this product is going to be good for you. It's called a DSCR loan. And as long as the property cash flows, we can usually get you a loan to help you do this. So I think it's an awesome thing. So here's how it works. So we're going to use the rental income of the property, either the current rental income if it is already an investment property, or the projected rental income through an appraisal if we're buying a new investment property that's not currently rented out. And we're going to divide that by the principal, interest, taxes, and insurance of that loan. And then this number is called the debt service coverage ratio. And what we're looking for is to see if that number is 1 or greater. And if it is, then we can use this DSCR product as long as we meet the other minimum down payment requirements, et cetera, to be able to do this. In some instances, a 0.80 DSCR ratio, so debt service coverage ratio, 0.8 is still allowable for some investors to be able to help you get a loan on a property. So these might be areas where cash flow is improving, a market that's getting better and better and better. 0.8% DSCR ratio is sometimes able to get a loan on a property, but we're typically looking for 1.0 or more. The higher it is, the farther away from 1, the easier it is for you to be able to qualify for that loan, because that means that the cash flow is going to be better and better and better. Okay. So here's some of the guidelines that you want to look out for when we are talking about the DSCR loans. So we can go up to $2 million on a DSCR. Again, this is for investment properties only. So this is not for a primary residence or a second home. It's for purchases, rate and term refis, and cash out refis. So if you already own an investment property, maybe it has a ton of equity in it and you have a loan on it, but you want to access some of that equity, but you don't have a job anymore, but you still have that equity and that income coming in, you can actually take cash out using the debt service coverage ratio loan as long as the property still cash flows after you take your cash out. There's no personal income or employment info that's required at all, because this is purely based on the cash flow of the property. That's all we're looking at. And if you have a good deal, then obviously you're probably going to be able to get a loan on this type of a situation. There's no limit on the number of properties that you can have or own on this one. So conventional guidelines go up to usually 10 properties. After 4, it starts to get a little bit more restrictive, and then up to 10. Some other types of loans will go up to 20 finance properties, but with a DSCR, you could have 100 and all of them could have a DSCR loan on it, and it doesn't matter. As long as the property makes sense and cash flows, you can get this loan on that property, which I think is a sweet option. So you can do 30-year fixed and ARMs. Both of them are available. Most people prefer the 30-year fixed. There's interest-only options available. So if you want to get your property to cash flow even more, you can use an interest-only option in some instances, as little as 3 months reserves, which is totally awesome. You can put as little as 15% down to get a DSCR ratio loan. When you're doing a refinance, it's more like 20 to 25% equity that you need to have in the property to be able to make it work. But when you're purchasing, 15% down is the minimum that you have to be able to buy a property with a DSCR loan. First-time investors are okay. So if you don't have a property, there are some investors out there for DSCR properties that you can just use this on the first instance that you want to. You can have credit scores down to 640. So you can still qualify even if your credit isn't the best. Non-warrantable condos are allowed. These are really, really hard properties to finance. Non-warrantable means that there's two types of litigation that a property has on it. It could be a trip and fall type of litigation where somebody fell and got hurt and sued an HOA, and that property is under litigation, or it could be something that's structural, that's wrong with the property. Maybe the builder messed up in building some beams in the ceiling of the complex, condo complex, and the HOA is getting sued because of that. So traditionally, when you have a non-warrantable condo, it's really, really hard to finance. But with a DSCR loan, it makes it work because as long as the property is going to cash flow, you are still good to be able to get a loan on this property. And then short-term rentals are allowed as well. So if you find some property that's maybe a vacation property and it is crushing it in terms of rental income, you can use that projected rental income to help you qualify for these loans. So these do work with short-term rentals, which I think is amazing. And then the last thing with the DSCR loans is that they are available for in either to be held in your personal portfolio, or you can put them in an LLC or an S Corp or a C Corp. So the different types of vesting that you can have is allowed. And I think that the LLCs or the S Corps are probably the preferred methods on the ways to wish to hold title for these properties. That way everybody's protected, but for the most part, you can use any type of title that you want, hold title any way you want with these different types of properties, okay? All right, so that's it for DSCR loans. If you're an investor that needs to get out there and buy some property, this is the best loan out there. As long as you can get some cash, you can borrow the down payment funds if you need to be able to get into these different types of properties that you can buy for investments. And a DSCR loan is definitely a way to go. So thanks so much for watching. I'm Jeff, the Mortgage Pro. Look forward to seeing you on the next show. Have a good one.